Hello and welcome to our channel. In this video, we'll be taking a look at some of the most popular online investment platforms and strategies out there. Whether you're a seasoned investor or just getting started, there's something for everyone in this video. Before we start, make sure to subscribe and hit the bell icon to be notified about more amazing upcoming informative videos. Now sit back, relax, and let's get started. Online investment platforms. First, let's take a look at some of the most popular online investment platforms. These platforms make it easy for anyone to invest in a variety of assets, from stocks and bonds to real estate and cryptocurrencies. One of the most well-known platforms is E-Trade. E-Trade is a great option for beginners, as it offers a variety of educational resources and tools to help you get started. Another great platform is Robinhood, which is known for its commission-free trading. Charles Schwab and TD Ameritrade are also popular options, both of which offer a wide range of investment options and resources. Let's take a deep dive into the world of online investment platforms. Investing can seem intimidating, but with the right platform and strategy, it can be a great way to grow your wealth. We'll be discussing the different types of online investment platforms available, the pros and cons of each, and how to choose the right one for you. So sit back, relax, and let's get started. Number 1. Brokerage platforms. The first type of online investment platform we'll be discussing is brokerage platforms. These are platforms that allow you to buy and sell stocks, bonds, and other securities. Some popular brokerage platforms include E-Trade, TD Ameritrade, and Charles Schwab. One of the main benefits of using a brokerage platform is the wide range of investment options available. You'll have access to stocks, bonds, mutual funds, ETFs, and more. Additionally, many brokerage platforms offer educational resources, tools, and research to help you make informed investment decisions. However, it's important to note that brokerage platforms typically charge commissions on trades, which can add up over time. Beware, these platforms may require a minimum deposit or account balance to get started. Number 2. Robo Advisors. Another type of online investment platform is Robo Advisors. These platforms use algorithms to create and manage your investment portfolio. Some popular robo-advisors include Betterment, Wealthfront, and Vanguard. One of the main benefits of using a robo-advisor is the low cost and ease of use. These platforms typically have low minimum deposit requirements and charge lower fees than traditional financial advisors. Additionally, robo-advisors can be a great option for those who want a more hands-off approach to investing. However, it's important to note that robo-advisors may not be able to provide the same level of personalized advice as a human advisor. Additionally, these platforms may have limited investment options. Number 3. Social trading platforms. A third type of online investment platform is social trading platforms. These platforms allow you to copy the trades of successful traders or invest in a portfolio created by a professional. Some popular social trading platforms include eToro, Zulu Trade, and Naga. One of the main benefits of using a social trading platform is the ability to learn from and copy the trades of successful traders. This can be a great way to gain knowledge and experience in the markets. Plus, these platforms may offer a wide range of investment options. However, it's important to note that social trading platforms may be more risky than traditional investment platforms. And remember, it's important to do your own research and not blindly follow the trades of others. So, How to choose the right platform. Now that we've discussed the different types of online investment platforms available, how do you choose the right one for you? The first step is to determine your investment goals. Are you looking for long-term growth or short-term gains? How much risk are you willing to take on? Next, consider your experience level. Are you a seasoned investor or new to the game? If you're new, a platform with educational resources and tools may be a better fit. Finally, consider the fees and investment options available. Platforms with lower fees and a wide range of investment options may be a better fit for long-term investors, regardless of your personal path. Always consult your investment professional for trading advice. Investment strategies. Now that we've looked at some of the platforms, let's take a look at some popular investment strategies. One strategy is dollar cost averaging. This strategy involves investing a fixed amount of money at regular intervals, regardless of the price. This can help you avoid buying high and selling low, which can be a common mistake for new investors. Another popular strategy is index investing. This strategy involves investing in an index fund, which is a type of mutual fund that tracks the performance of a specific market index. This can be a great way to diversify your portfolio and potentially earn returns that match the overall market. Let's take a closer look at a few more. Value investing. This strategy involves looking for undervalued assets with the potential for growth. Value investors look for companies that are trading at a lower price than their intrinsic value. The goal is to buy low and sell high, earning a profit in the process. One of the main benefits of value investing is the potential for high returns. By identifying undervalued assets, value investors can potentially earn higher returns than the market. Also, value investing can be a great way to beat the market if you can identify undervalued assets that have the potential to grow in the future. However, it's important to note that value investing can be a time-consuming process and requires a lot of research. Moreover, it's important to understand the risks involved and not to overpay for an undervalued asset. 2. Growth investing. Another strategy is growth investing. This strategy involves investing in companies that are expected to grow at a faster rate than the overall market. Growth investors look for companies with strong earnings growth and a high potential for future growth. The goal is to invest in companies that will grow in value over time. One of the main benefits of growth investing is the potential for high returns. By investing in companies with strong growth potential, growth investors can potentially earn higher returns than the market. Additionally, growth investing can be a great way to invest in companies that are disrupting their industries. However, it's important to note that growth investing can be risky, as these companies may not have a track record of profitability. As always, it's important to understand the risks involved and not to overpay for a high-growth company. 3. Dividend investing. Our last strategy for today is dividend investing. This strategy involves investing in companies that pay a regular dividend to shareholders. Dividend investors look for companies with a history of paying and increasing dividends, as well as a strong financial position. The goal is to earn a steady income stream from the dividends paid by the companies you invest in. One of the main benefits of dividend investing is the potential for a steady income stream. By investing in companies that pay dividends, you can earn a steady stream of income without having to sell your shares. Also, dividend investing can be a great way to invest in companies with a long history of profitability. However, it's important to note that dividend investing may not provide the same level of growth potential as other strategies. Again, remember, It's important to understand the risks involved and not to rely solely on dividends as your income source. So, how to choose the right investment strategy now that we've discussed the different types of investment strategies available. How do you choose the right one for you? The first step is to determine your investment goals. Are you looking for long-term growth, a steady income stream, or a combination of both? Next, consider your risk tolerance. Value investing and dividend investing may be less risky than growth investing. Finally, consider your investment horizon. If you're investing for the long term, a growth strategy may be a better fit, while a dividend strategy may be a better fit for those looking for a quick nickel. And so there you have it. That was a quick overview of some popular online investment platforms and strategies. Remember, investing always carries risk, so it's important to do your own research. Consult a financial advisor and understand the risks involved with any investment before committing your money. Thanks for watching, and be sure to subscribe to our channel for more videos like this one, and let us know in the comments if there's a particular topic you'd like us to cover next.